Good morning. Hi, I'm Mandy Corriea. I am with W Real Estate Broker Associate for about 22 years plus. I am here today to kind of explain to you about FICO scores. You know, the good famous credit score that you guys get when you open new credit cards, get a car. A lot of you get those credit karmas or an update from your credit card or an update from your bank that says what your score is. So a lot of times when I'm meeting a new client, it's like, or even just somebody I'm on the streets or at a party, it's like, hey, you own a home, it's a good time to buy. And the first thing a lot of people say is, well, my credit's awful. And I'm like, well, how do you know? Well, my bank sends me an update every month and it's really, really low. So what I want to explain to you about FICOs is that most places, almost all places other than a mortgage, reports to a bureau. So maybe your Capital One credit card might report to TransUnion, and your Bank of America auto might report to Experian, and that old cable bill that from college that you forgot about and it's a judgment from like 20 years ago is reporting to Experian. So now you've got three, I guess two credit cards, we'll say, and a bad ding on your credit, but they're all from a different bureau. So depending on the credit company that's sending you your update could be detrimental to you in regards of, for instance, the old cable bill from college. It's reporting to Experian. So if your bank or your credit card, that's the update they give you, or however you get your free credit card or credit score. So when that comes over from Experian, it's going to be pretty poor because the only bureau reporting is that really negative, derogatory, that's a good word to remember, derogatory credit from a long time ago that's hurting you. So, you're getting this update saying, oh, your FICO's 570. Well, that's not a very good score. We really want to see a 620 or up. There are loans that will do a 580 to 620, higher rates, a little bit more tighter terms, but 620 can get you a loan. 640 to 680 is pretty good for a first-time home buyer. So it's definitely workable. So my point is that, if you're getting this credit report update from your bank and it only produces an Experian, you're going to get a really bad score. But if your other company produces a credit score as well from TransUnion or Experian, there's a good chance those are higher. So what that means for you in real estate is that when you go to apply for a mortgage loan, the lender or the bank or the mortgage broker will pull a tri-merge. What they do is they pull all three bureaus. So for you, you've got, your Bank of America card, you've got your Capital One credit card, and you have this derogatory, all from a different bureau. So when the lender, bank, mortgage broker pulls your credit report and they see all these scores, they see the 560 for the bad one. We see a 700 and then we see a 690. It's like, whoa, there's three different scores. The lender throws out the lowest score and the highest score, and they take the middle score. And that's what they will use to qualify. So in this circumstance, the 580 gets thrown out, the 710 gets thrown out, and now you have a 690. That's a really good FICO to buy a home. Now keep this in mind though, your middle score may not be the one that's used for your friend or your sister or your brother. See, so all those bureaus, they have this interesting way of figuring out how they're going to score you. It goes off of time of how long you've had it. It goes off of limit versus your balance. They really like to see 30% of your limit to balance. So if you have a credit card that's $1,000 limit, or maximum, I guess, they want to see about $300 or less on your card. That will help. They want to see actual activity. And they don't want to see derogatory stuff. So there's a few things that can impact you. Pulling credit. You go buy a car, you have it pulled a few times, then you get a credit card, and then you have your loan, and it's all kind of spread out. That can kind of impact you a little bit. But again, it's only for like 30 to 60 days. And so those are all things to keep in mind. And then your friend or your sister or your brother, they pull theirs and their middle score might be TransUnion. Yours might be Experian. So it just depends. So that part is not totally black and white. It's a system. But the cool thing nowadays is that most lenders, bankers, mortgage brokers all have a what if credit scenario where they can see your credit and then put in some ifs. If I pay this down, or if I pay this off, or if I get this one removed that was derogatory, all these different ifs, it can kind of produce what your score could be. So that's a really cool tool. And so because of that, I always recommend getting pre-approved. Even if you think you're not quite ready, you want to see your score and start working on improving it, clearing it up, or cool, you know that's awesome. Your credit score is awesome. You're not changing it. And now you want to focus on the next part of the pre-approval. So that is FICO scores in a nutshell. So never assume you have bad credit. Make sure you're getting it checked out with a lender, banker, or mortgage broker first. Or I think Credit Karma will do a tri-merge, but there is a fee. So make sure if you are getting a credit reporting system sent to you, it is all three. And if you don't want to pay, sometimes you can go to each company that you have and sign up for their free one. And you can kind of get an idea. Maybe Capital One's going to report Experian, Bank of America might report TransUnion, and maybe Macy's might do Equifax. And so if you're getting some free ones, one of each, you can kind of figure out where your score is. Okay, so that is FICO scores in a nutshell, and stay tuned for more.